Hey everyone, welcome back. It's time for another deep dive. And today we're tackling the world of investing with a legend, Peter Lynch.
Oh yeah, Peter Lynch, the Magellan Fund guy.
Exactly. His book, One Up on Wall Street, is full of incredible insights. And you know what's so cool about it? It's not just for Wall Street insiders. It's for everyday investors like you and me.
Totally. I think that's what makes Lynch so appealing. He's got this way of making investing feel accessible.
Mhm.
Like anyone can do it with the right approach.
And he doesn't sugarcoat things either. He's very upfront about the risks involved, but he also makes it clear that with careful planning and research, anyone can build a successful portfolio.
Absolutely. And he starts with something that might surprise you, personal preparation.
Yeah, you'd think he'd jump right into stock picking. But he actually emphasizes the importance of getting your own financial house in order first.
Right. He's all about building a solid foundation before you even think about buying stocks.
So what did that look like?
Well, for starters, he says you should own your own home. That stability is crucial.
Okay, makes sense.
And you need to have a financial cushion, a safety net, so you're not investing money you can't afford to lose.
It's like making sure you're not jumping into the deep end of the pool before you know how to swim.
Exactly.
Yeah.
And he goes even deeper. He talks about honestly assessing your personal qualities for investing success.
Like what?
Are you patient? Can you think for yourself? Can you handle the ups and downs of the market? These are questions everyone should ask themselves before diving in.
It's about self-awareness, knowing your strengths and weaknesses as an investor.
Right, because investing is as much about psychology as it is about numbers.
So step one is really getting to know yourself.
Yeah.
That's a powerful point.
It is. And once you've got that foundation, Lynch says, forget trying to predict the market.
Oh yeah, he's famous for that.
Yeah.
It's a fool's errand, he says.
Right. It's like trying to time the waves at the beach. You might catch a few, but you're more likely to get wiped out.
He has this great line in the book. He says, the stock market doesn't exist. It is there only as a reference to see if anybody is offering to do anything foolish.
I love that. So classic Lynch. He's basically saying, focus on finding great companies you understand and believe in, not on trying to outsmart the market.
So it's about finding value,
Yeah.
not chasing trends.
Exactly. And this leads to one of the most intriguing parts of the book, his belief in the advantage of being an amateur.
Wait, what? He thinks amateurs have an advantage.
He does. And his reasoning is pretty fascinating. He argues that everyday people like you and me gain insights from our jobs, our daily lives, our consumer experiences, long before Wall Street analysts catch on.
So we have a different perspective.
We do, and often a more grounded one. We're not stuck in the echo chamber of Wall Street.
He gives the example of noticing a surge in orders at a Goodyear tire store as an early sign of a company's turnaround.
Exactly. It's about being tuned in to what's happening around you. You might see changes in your local supermarket, your favorite clothing store, even your workplace. That could signal a company's success.
So pay attention to those everyday observations. They could give you a real edge in the stock market.
Absolutely. Lynch is all about empowering the everyday investor to use their own knowledge and observations to find potential winners.
Okay, so we've got our personal finances in order. We're not trying to time the market. We're paying attention to the world around us. What's next?
Well, Lynch breaks down stocks into 6 different categories to help you understand what you're looking at.
6 categories. That's interesting. Tell me more.
He talks about stalwarts, fast growers, cyclicals, turnarounds, asset plays, and even the perfect company.
Wow. So he's got a framework for analyzing different types of companies.
He does. And this is where his real-world experience shines through. He gives concrete examples for each category and what you can expect from them.
Okay, so like what, for example?
Well, he talks about automatic data processing, ADP. It's not a flashy company, but it has a long history of consistent earnings growth.
So it's a steady performer, not a high flyer, but reliable.
Exactly. That's a classic stalwart, a large, reliable company that might not offer explosive growth, but delivers steady returns over time.
Makes sense. What about another example?
He highlights La Quinta Motor Inns. They carved out a niche in the super competitive motel industry.
By focusing on budget-conscious business travelers.
Right, exactly. It shows how a company can succeed by targeting a specific market and doing something different from the competition.
So it's about understanding their story, not just the numbers.
You got it. Lynch argues that understanding the story is just as important as looking at the financial data.
But he also warns about getting caught up in the hype of whisper stocks.
Oh, those are dangerous, exciting stories, but no real substance to back them up.
Right, like those companies that Promise to revolutionize the world, but have no actual product or revenue.
Exactly. He uses cautionary tales like Worlds of Wonder and Pizza Time Theater to highlight how chasing the latest hot trend without doing your homework can lead to losses.
So don't believe the hype. Do your own research.
Always. Look beyond the flashy headlines and focus on what really matters. And what really matters, according to Lynch, is
Earnings.
right.
Right. We'll have to dig into that more after the break.
Earnings. It always comes back to earnings. Lynch's central point is that earnings drive stock performance in the long run.
Yeah, he's all about looking beyond the hype and focusing on a company's ability to make money. The bottom line.
Exactly. He even includes a chart of Dow Chemical in the book showing how the stock price followed the earnings trend over time. It's a visual reminder that while there are always ups and downs, consistent earnings growth is what drives long-term success.
It's like he's saying, follow the money.
Right. And speaking of ups and downs, we can't talk about investing without talking about selling. Lynch gives some really helpful guidelines on when to let go of a stock.
Oh yeah, selling is just as important as buying. When do you know it's time to say goodbye?
Well, he focuses on changes in the company's story or fundamentals. Is the original reason you bought the stock still valid? Are there warning signs that things are changing?
So it's not just about the stock price going up or down. It's about constantly reevaluating your investment thesis, making sure it still makes sense.
Exactly. A disciplined approach to selling is as important as a disciplined approach to buying.
This all ties back to Lynch's emphasis on being a long-term investor. He's a huge advocate for patience and not getting spooked by short-term market swings.
Absolutely. He even says that successful investors have to be able to endure some pain along the way. It's about sticking with your convictions and riding out the storm.
You know, he has this great line where he says, in the stock market, 1 in the hand is worth 10 in the bush. Don't get greedy chasing the next big thing. Focus on the solid investments you already have.
It's a reminder that investing is a marathon, not a sprint. And as Lynch points out, time is your greatest ally when you're in it for the long haul.
Now, it's not all theory and charts. Lynch also shares some great stories from his own investing journey, like how his first big win helped pay for graduate school.
Oh yeah, Flying Tiger. That was a great story. He saw the potential in this cargo airline early on and rode that wave to a significant profit.
It's not just about the money, though, right? That early success seems to have really solidified his belief in finding those hidden gems that Wall Street often overlooks.
It definitely shaped his investing philosophy. His personal experience with Flying Tiger fueled his passion for uncovering under-the-radar opportunities.
So it's about looking beyond the obvious, the companies that everyone's already talking about.
Right, he calls them pet boys, companies with dull names or working in unglamorous industries that Wall Street tends to ignore.
Like Crown Cork and Seal, they make cans and bottle caps. Not exactly the most exciting business, but hey, if it works, it works.
And that's the key. Finding those companies that might not be making headlines, but are delivering value to shareholders.
And he makes a good point about these boring companies. They often give you more time to buy the stock at a good price before everyone else catches on.
Exactly. While the masses are chasing the latest hot stock, there could be hidden gems right there in plain sight, waiting for the patient investor.
Okay, so we've talked about the importance of earnings, the need for patience, the advantage of being an amateur. But we also have to acknowledge that investing comes with risks. Lynch is very upfront about that.
He is. He's very realistic. He says large profits can be made in common stocks, but so can large losses. You have to go in with a clear understanding of both the rewards and the risks.
He talks about weathering some pretty significant market downturns, like a crash of 1987 when Magellan Fund shareholders lost billions in a single day.
That was a tough time, but it shows his incredible commitment to long-term thinking. Even in the face of a dramatic event, he stayed focused on the fundamentals.
And the market did bounce back. Those who held on to their investments came out ahead in the end.
Exactly. It's a powerful lesson in the importance of not panicking during market turmoil. Lynch even tells this funny story about how he spent the weekend after the crash playing golf in Ireland, thinking about which stocks to buy at bargain prices.
Wow. So he was actually looking for opportunities in the midst of the chaos.
He was. He saw it as a chance to buy great companies at a discount.
That takes a certain kind of mindset. A lot of people would have been freaking out.
He also stresses the importance of diversification. Don't put all your eggs in one basket.
Right? Spreading your investments across different industries and types of companies helps to manage risk.
Exactly. And don't be afraid to invest in what you know. If you're a teacher and see a surge in demand for online education platforms, that might be a good place to start your research.
It's all about connecting your everyday experiences with potential investment opportunities. like Lynch with the Goodyear tires.
Exactly. He encourages you to be curious, to ask questions, to never stop learning.
He believes that anyone can be a successful investor with the right mindset and a little bit of effort.
And, he uses some really relatable examples to show how powerful long-term investing can be.
Like what? Give me an example.
He compares buying stocks like the Gap or La Quinta Motor Inns to everyday purchases like jeans or motel stay.
Okay, I like that. Makes it relatable.
Right.
Yeah.
So he points out that while those jeans would have worn out long ago, 10 shares of Gap stock bought in 1976 would be worth thousands of dollars today.
That's a great way to visualize the power of compounding. A seemingly small investment can grow significantly over time. So as we wrap up here, what are the key takeaways for our listeners? They're probably wondering how to actually apply Lynch's wisdom to their own investing journey.
I think the biggest takeaway is that you don't need to be a Wall Street whiz to succeed in the stock market. Lynch really gives you permission to embrace your amateur status, to use your own knowledge and experiences to find promising companies.
Yeah, it's about trusting your gut,
Yeah.
but backing it up with solid research. He encourages us to understand the company's story and focus on those fundamentals, like earnings growth.
Absolutely. And perhaps most importantly, he reminds us to be patient and stay focused on the long term. It's about tuning out the market noise and resisting the urge to jump in and out of stocks based on short-term fluctuations.
Lynch believes that time is the investor's greatest ally. Those who can weather the inevitable storms are the ones who will ultimately reap the biggest rewards.
And here's a final thought for you to ponder. In a world obsessed with short-term gains, it's more important than ever to cultivate the patience and discipline needed to be a successful long-term investor. How can you apply that wisdom to your own journey?
That's something for all of us to think about as we continue to navigate the exciting and potentially very rewarding world of investing. Thanks for joining us for this deep dive into Peter Lynch's One Up on Wall Street. Till next time, happy investing.